Good afternoon and welcome back to Moneycontrol's live stream. You're tuned into Closing Bell with me, Lavisha Darat, and joining my colleague Yatin Mota. Well, Yatin, another day of consolidation and definitely a larger loss that we saw today. Third straight day of declines. We're seeing Sensex down about 850 points and Nifty also below that 24,700 mark. So yes, yesterday we were hoping for 25,000 sustenance, but today we have crossed below that 24,700 as well. The sell-off was broad-based. Even the mid-cap and small-cap indices, which saw 6-day run-up and was holding the fort as well, today succumbed to selling pressure. India Wix also jumped by 1% or so, nearly 0.1% that came up for India Wix. And all the sectors have nosedived in the negative territory. Even the metal and IT stocks, which were holding up in the market in the intraday sessions, that also succumbed to selling pressure. So Yatin, once again, a very muted sentiment, and experts also have been pointing out that 25,000 was a key sustenance for an upside, but even that has been, well brushed aside.
Absolutely. And, before the show, what we discussed, Lavisha, that the markets were looking at support at 24,800. That broke. In fact, 24,700 also broke intraday with, days low closing. Nifty collapsed 260 points. So did mid-cap and small-cap indices, which were holding out for a while now. Post the ceasefire, never have we seen the advanced decline ratio in the favor of declines. And today we have the advanced decline ratio, which was 1:2, broadly indicating that there was only one stock gaining for every 2 declining. And the good part about today's market, on the negative side, obviously, was that none of the sectors were, on the gaining spree. So a lot of, reasons. It could be Japan and as well as US interest rates and yields rising, or probably, the US downgrade, which is playing a negative sentiment globally, or probably the COVID cases, which are rising globally. Not a cause of concern as of now. But yes, these are the negative news flows, probably because of which the markets were slightly spooked in today's trading session.
That's right. Now, let's take a look at some of the top gainers and losers on the Nifty 50 front. Well, the first up is your Coal India with about 1.3% gains. The company is set to file, the two subsidiaries of the company is set to file draft papers for an IPO, and Yatin will take us through more on those developments as well. The second is your ONGC with about 1% gains ahead of Q4 results. MC Poll is expecting, Moneycontrol is estimating that the operating profit is expected to improve sequentially on the back of firm crude prices. ONGC rallying ahead of its Q4 results. Tata Steel, some of the metal stocks did well today. Tata Steel, Hindalco seeing a gain of about 0.5% to 0.7% or so. Hindalco also, after its decent Q4 numbers where we saw that a good growth from the Indian business, that's why it's seeing a little bit of a traction today. Other than that, Dr. Reddy's, Infosys also gaining in the Nifty 50 gainers list. On the contrary, if you look at the contrary picture, Eternal with about 4% cut as the board starts the process of conversion into Indian owned and controlled company. So there are reports that there could be cap on foreign ownership, which would potentially exclude the company from the MSI index also. So yes, we can see some sentimental reaction playing out on that as well. Some auto stocks also did not do well. The likes of Hero MotoCorp, Bajaj Auto seeing a cut of about 3%. Maruti Suzuki also with about 2.5% or so. Other than that, Shriram Finance also seeing a cut of about 2.8%. But yes, mid-cap and small-cap indices, which was holding the fort till yesterday, once again gave in to selling pressure today. 6 days of run-up, all of them erased today as well. Yatin, what are you gathering from the top gainers and losers from this space?
So, if you look at the mid-cap end of the market, yes, there were names which did well despite the market weaknesses. Pfizer posted the quarterly numbers and margin expansion. We saw that stock move 11% in trade. BASF, Zensar Technology, CCL products were the other stocks which moved in the market. What was not doing well is DOMS post numbers down 9%. Kochi Shipyard, RITES. So essentially the defense come railway stocks saw some profit taking in trade. So clearly all of those stocks were under pressure. What was also doing well is Reddington, moved 5% intraday, however cooled off, but still gains coming in post the numbers. Stocks like BSC Limited, APL, Apollo, Shree Cement, despite the intraday profit taking, hit record highs in trade today.
All right, let's now break down some of the stocks which did come under limelight today. Metal stocks were holding up today, but eventually did succumb to selling pressure. Now, the buzz did come after China's central bank lowered its benchmark lending rates for the first time after 7 months, and that raised hopes of potential increase in the metal consumption, which would benefit Indian metal producers and exporters as well. Now, what China did was it reduced the one-year loan prime rate by about 10 basis points to 3% from 3.1. and 5-year rate was also cut up to about 3.5% to from 3.6%. Now, these rate cuts are aimed at boosting the credit demand in China, which could lead to higher demand for commodities like, for instance, your copper, aluminium, and steel. And since China is one of the largest consumers of base metals globally, any signs of stimulus typically leads to a rally in the global and domestic metal stocks also. But today, given the broad-based sell-off that we saw in the markets, eventually Nifty Metal Index also succumbed to selling pressure and eked out a cut of about 0.5% or so. Yet then, given the rally we have seen in the metal stocks, even after the US-China trade deal, dollar is once again above the 100 mark. So that could present a key demand risk going ahead.
Yes, and I think China has been continuously announcing stimulus. It hasn't been really working, it seems, in the economy, and that is the reason why they keep cutting rates, keep cutting CRR, keep boosting the real estate sector. But yes, metals have been stable. Haven't seen a rally, because of the Chinese reasons or the Chinese economy boosting. Because as you mentioned, maybe the dollar index or maybe the global recession fears are something which are a cause of concern for commodities at this time.
That's right. Now, let's move on to another stock in focus, the stock which did react positively to its March quarter performance. That was your DLF. We saw that the company report good numbers from both the top line and bottom line front, but we saw margins which narrowed sharply about 400 basis points from last year. So a mixed Q4 then, but brokerages continue to remain upbeat on the counter. Jefferies did share a buy call on the counter and shared a target price of 1,000 rupees per share. What they said was that the fourth quarter was strong and a strong momentum was seen in their luxury Dahlias project. Now, this project alone drove about 2,000 crore rupees in pre-sales. Morgan Stanley also maintained an overweight rating on the counter and shared a price target of 910 rupees per share. Now, the brokerage also remained quite bullish on the company's pre-sales in the fourth quarter, which took overall FY25 pre-sales to the highest amongst its peers. The company's net cash position also improved from the previous quarter, which is again one of the positive re-ratings for the counter going ahead. Yet then, given the company has kept its medium-term guidance unchanged, and now majority of the realty stocks have picked up momentum, it builds good ahead as interest rates are also on the downtrend.
Yes, I think interest rate downtrend is something which benefits real estate sector. However, if you look at DLF, the bulk of their projects now in NCR would be on the luxury side. We have seen initial success in the Gurgaon region, and clearly that has done well for the company. Yes, if you look at brokerages like Jefferies or CLSA, they have a target in the range of 900 to 1,000. So brokers still have been positive on the stock, despite some challenge in the short term for the real estate sector.
All right. Let's move on to another stock in focus. That was your Infosys, because there was one particular note which came out for Infosys from Nomura. Now, they maintained a buy call on the counter and have shared a target price of 1720 rupees per share. Some key things that the Japanese brokerage firm highlighted upon meeting Infosys CEO is that first, the company expects its revenue growth in constant currency terms to be between 0 to 3% for FY26. Now, this is lower than 4.5 to 5% it had projected for FY25, and the street was also working with about 2 to 4% growth guidance for the new financial year. The company's CFO also highlighted that its project Maximus continues to deliver on margin expansion, and the project will run around for another year, which is aimed at margin maximization as well. Now, the brokerage also said that it continues to reiterate that Infosys as its top pick, and since the stock is currently trading at 21 times its FY27 forward EPS, it continues to remain positive on the counter. Yeah, then if you look at Infosys, the counter reported second slowest earnings growth in March. And now with this lowered guidance, it hints at what macro level challenges look like going ahead for the overall IT sector as well.
Yes, I think a lot of changes are happening on the trade war. In fact, today we have the U.S. president, announcing that he spoke to Putin regarding the ceasefire. He is also speaking to a couple of his counterparts when it comes to the trade deal. So I think a lot of things are settling, which were a cause of worry for the IT sector. So probably, in the shorter term, maybe there could be pain, but longer term, it seems that a lot of things are getting resolved for the sector.
I see. And what's the next on your counter, Yatin?
So, one stock which was in focus today was Coal India. Now, Remember, Coal India a few years back was one of the super hit PSU IPOs in which investors made good money. Now the company is planning, the IPO of two of its subsidiaries. Number one is BCCL, which is Bharat Coking Coal, and this is one, IPO which the markets would be looking forward to. Two subsidiaries, Coal India has shortlisted according to the company official, Bharat Coking Coal as well as Central Mine Planning. These are the two subsidiaries which will go for IPO very, very soon. And once the market conditions are ripe, they will file the RHP and DRHP with SEBI. Now, the IPO timelines will obviously depend on the market conditions, but post this announcement, the stock saw good traction, almost 3% higher intraday. Not only that, the Coal India also is planning up to 600 megawatts of multiple plants in the thermal space. One plant is coming which is 1600 megawatts, and or the total outlay for the entire expansion would be more than 16,000 crores. So the company is also diversifying away from basic coal production business towards now energy as well as various other segments, including renewable energy projects.
That is a stock that we need to watch out for. But since we're talking about IPO also today, one IPO which opened for subscription, that was your Borana Weaves, Gujarat-based textile manufacturer. And within 1 hour, we saw that the IPO was fully subscribed, and retail investors have led that demand. So yes, so while the secondary markets did see some bog down and sentimental pressure, the primary markets, the Borana Weaves IPO did see some good traction in the primary markets. But yes, with that, we've come to an end of this edition of the show. It's a wrap from Yatin and me, and thank you for watching. Good morning, hello, and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lavisha Darat. Well, we are back with a new day, and hopefully we can have a better day than yesterday that we saw. Definitely, the GIFT Nifty is indicating a positive start for our own markets. So whether the 25,000 mark sustains today is something that we'll watch out for, because we did snap and we broke below that 25,000 mark in yesterday's trading session. The optimism from global markets does trickle in. US markets were quiet overnight, but ended on a positive note. It shrugged off yesterday's concerns of Moody's credit rating downgrade, and even Asia Pacific markets also started the day on a positive note. If you look at China cut its benchmark lending rate after a gap of 7 months. So both the 1-year and 5-year loan prime rates now have come down from its previous. Other than that, we have also seen in the Chinese markets that we also saw the largest battery manufacturer, the CATL, that debuted shares in Hong Kong markets, and 14% uptick. That's what it debuted out. So that's quite impressive that came in. Now, the company does plan to use the funds to build their own factory in Hungary and supply batteries to the European clients, which is your Volkswagen, BMW, and the likes. So yes, that's an optimism that is coming in from the global markets on a whole, looking positive, can support any gains which could be seen in the Indian markets. But yes, coming back to home, stock-specific action is expected to continue. Today, we can see some earnings reactions. Bharat Electronics did report a good set of numbers. could react to positively to its March quarter performance. Power Grid muted performance can react to its Q4 results as well. Also, we'll be taking your stock related queries from our live feed, so keep posting them and we'll take them up before 9:30 a.m. Now, let's quickly take a look at the top headlines this hour. Stocks in the Wall Street end higher despite Moody's rating downgrade. The Dow Jones advances over 130 points, while the S&P 500 eked slimmed gains but rose for the 6th straight day. Stocks in the Asia Pacific also opened higher. China cuts benchmark lending rates after 7 months. Meanwhile, the GIFT Nifty is indicating a positive start for our own markets. Oil prices rise on signs of faltering US-Iran nuclear talks and weakened prospects of more Iranian oil entering the markets. Gold prices, meanwhile, move up on safe haven demand on Moody's.
Thousand crores. So the company is also diversifying away from basic coal production business towards now energy as well as various other segments, including renewable energy projects.
That is a stock that we need to watch out for. But since we're talking about IPO also today, one IPO which opened for subscription, that was your Borana Weaves, Gujarat-based textile manufacturer. And within 1 hour, we saw that the IPO was fully subscribed, and retail investors have led that demand. So yes, so while the secondary markets did see some bog down and sentimental pressure, the primary markets, in the Borana Weaves IPO did see some good traction in the primary markets. But yes, with that, we've come to an end of this edition of the show. It's a wrap from Yatin and me, and thank you for watching.